Markets ended the day down slightly today after the GOP walked out of debt ceiling negotiations and Chair Powell pumped the markets a little bit. So we had a little bit of offsetting factors there. So let's jump in, take a look at what's going on. Markets finished down just a little bit, Dow down 100 points, 0.33%, S&P down 6 points, 0.14%, NASDAQ down 30 points, 0.24%. And as we know, the NASDAQ's been on a tear with a handful of stocks making up those gains. Two big news items today. The Republicans walked out of the debt ceiling negotiations, and they're going to drag this out as long as they can. It's all about gamemanship and politics, so they're going to drag it out to the nth hour. And we know what happened the last time they did that. Markets dropped about 20%. So that's your worst case scenario if they can't come to a resolution by the end of the month going into June. Most likely they will not. There's really no incentive for either side to come to an agreement quickly. They have plenty of time. Markets might drop 20%. On other news, Chair Powell sat down with Ben Bernanke today, the two biggest pumpers in the history of the Fed, to talk about things. And Jerome Powell said that, number one, he said that financial stability tools help to calm conditions in the banking sector. Developments there, on the other hand, are contributing to tighter credit conditions and are likely to weigh on economic growth, hiring, and inflation. He said, so as a result, our policy rate may not need to rise as much as it would have otherwise. The key is may not need to rise as much. So he said, we are not done hiking. And he also said many people are currently experiencing high inflation for the first time in their lives. It's not a headline to say that they really don't like it. He said, we think failure to get inflation down would not only prolong the pain, but increase ultimately the social costs of getting back to price stability, causing even greater harms to families. He said they haven't made any decisions about the extent to which additional policy funding will be appropriate. But given how far we've come, as I noted, we can afford to look at the data and the evolving outlook. Several of the Fed members came out this week and said that there's not enough information to support rate cuts, and there's enough information to support rate hikes. So several of the Fed members said they can justify rate hikes at this point. Several said that, that they definitely aren't going to pull back. And, Powell ultimately said that, rates may not have to rise high enough, rates may not have to rise as much as expected to curb inflation, but they still expect that they're going to have to raise rates. Are going to be data dependent, like they always said. And, that was the news on the Fed. So let's jump in and take a look at the markets here real quick. And again, not a whole lot going on in the market, still kind of ranging here sideways. This is the Dow kind of hanging on to this range here, not really doing much movement here in the last few days. The NASDAQ has been on the run, but let's just take a look at just general retracement areas, because the Dow has made up the most ground overall, being the safety trade all the way to the 702, and ultimately rejected on the 702. Now it's playing with the 618, has lost the 618. So the question is, what will happen at the 0.5? The NASDAQ, let's take a look at the NASDAQ, the biggest winner out of all the sectors right now because of a handful of the tech stocks, breaking through the 0.5, headed for the 618. Will it get there, or is it reversing on the previous high put in back in August? It breached that high, but has found a rejection and ultimately kind of almost not quite touching it as support, but finding support above it at the close today. The S&P, let's take a look at the S&P and see what kind of retracement we've got here for this range right now in the S&P overall. Well, if we take it just really to here to the wick, so 0.5, the S&P is rejected several times on right now. So this could be a reversal point for a little bit of a, profit taking. The markets have been on a tear here last few days, over the last week. If you look at the week, let's get rid of this right here. Markets have been, finishing above these last levels on the weekly, but still below that August high, except for the Dow. Let's see where the Dow is at. That August high right here. So the Dow's taking out the August high. And then, of course, we just looked at the NASDAQ has taken it out as well. The S&P is the only one that has not taken out the August high yet. So interesting there. The VIX just kind of hanging out, tapping on the low lines. Dixie catching a little bit of a bounce, still waiting for that W reversal on the Dixie that a lot of people are looking for, and the rebound back up to the 105 level. I think that's almost a given at this point that we're going to see the dollar rise to the 105. And the question is, where does it go from there? Let's look at this from retracement levels here and see what we can come up with. So right now, not even to the 236 yet. The 382 is right in this area. Ultimately, the 702 and 786, are a long way off at this point. The 2-year catching a little bit bounce today, 10-year catching a little bounce, putting pressure on mortgage rates. We've seen a decline in mortgage applications done. In other news, well, gold has a little pullback here on everything that's going on. Caught a little bounce at the end of the day, but it's been pulling back for the last several days. Got all the gold bugs coming out of their closet. But again, right now it could just be a higher low. It's got a higher high. And this just could be a higher low in this trend here. So is gold going to continue to that 4,000 level that a lot of people are projecting? Or is this it for gold? And, we get a deeper retracement. Let's take a look at what that would look like. On the flip side of the Fibonacci, you can do these retracements to the top side, to the bottom side. I'm not going to take these extreme wicks. I'm going to take the closes right now, finding support on the 236, where it rejected originally on the way up. So these Fibonacci levels are important levels in terms of technical trading, algorithmic trading, formulatic trading, all these little levels here. So next stop 382, and then a 0.5, and you can see all the confluence around the 382 and a 0.5 as it goes along. Here's the 618. Had to wrestle with that and break through it. 702, same thing. A little bit of wrestling with the 702 to break through it, and then ultimately the 786 is your last line of defense before a full retracement. So it'll be interesting to watch these Fibonacci levels as we go along. Here's Bitcoin. And I've got a couple things marked out on the Bitcoin. A lot of people have been watching this head and shoulders pattern here, or what they're calling, some people are calling a head and shoulders pattern right here. And if that's the case and plays out, the downside target is 23,786. Let me get rid of that right there. 23,786 would be the downside target there. And this is taken from the neckline right there and from the point of breakdown right here. That's what gives you that target. The other thing that's interesting is, let's take a look at the other side here. If that is a range, again, you want to look at the Fibonacci's. So if we look at a Fibonacci retracement from those October lows to the April high, right now playing with the 236, the 382 is that next target, which is right in that retracement area. If the head and shoulders plays out down to the 0.5, where the 23,000 range is, 0.5 on the Fibonacci. So likely to find a bounce at the 382, run back down to the 0.5. And then if that is lost, ultimately down to the 21,349. The other thing that's interesting is the Bitcoin conferences this weekend. And I marked that out the last couple of years with Bitcoin. And, this was the Bitcoin conference in 2022. This was the Bitcoin conference in 2021. And what we saw was, I believe, about a 20% decline in Bitcoin at the weekend of those conferences. So that's about 24, 25%. Last year, I believe it was right around here. The last time it ultimately went way down, but that was a 30% drop. Ultimately, there was a lot. This is the Do Kwon time frame here when the Bitcoin conference happened. Back during that time frame, it was April 16th through the 19th of 2022, somewhere around there. So that would have been, right about this area right in here. Yeah, right in there was the Bitcoin conference. End of the Do Kwon buying, slipped and fell 30-something%. So let's take a look at that. What happens if Bitcoin drops 30% from, kind of where it's at today over the conference? If it drops 20%, that puts you down to the 21,000 level where we just saw the Fibonacci, and 25% puts you down to 20,000. 30%, 18.5. And then of course, if it did retrace 35%, just like 2021, then that puts you back down around 17,000, back to this lower range that it price stayed in back in November, December, and earlier January this year. So Ethereum continuing to plug along, kind of, in the accumulation range. When you kind of zoom out and look at this, you can kind of see, sideways to up accumulation pretty much on everything. I mean, there's Bitcoin kind of sideways and up accumulation, Ethereum, XRP, Cardano, Solana, Matic, pretty much everything in that sideways to up accumulation, which could hold as long as no other bigger factors end up playing out in the markets. So these are the things I'm looking at. I'll see you in the next video.